Some stark and straightforward news on unemployment delivered today to members of the House Appropriations Committee by Treasury Secretary Timothy Geithner. Secretary Geithner called the nation's 10% unemployment rate unacceptable. He then warned that it may very well go up before it starts to go down next year. Immediately after that testimony today, I got the chance to sit down one-on-one with Secretary Geithner at the Treasury. We started with jobs. Mr. Secretary, thanks very much for your time. Appreciate it. So today on Capitol Hill, you said essentially that the rest of the year looks tough in terms of unemployment, and then you urged lawmakers to pass the new Wall Street rules, the new financial regulation. Is there a connection between those two? Are those two items connected?
Well, for the economy right now, the most important thing we do is to pass additional targeted support for growth, for expansion, for job creation. And, the President's proposed a series of measures to help small business, more money for state and local governments so they can make sure that teachers and firemen can, stay on the job, support for infrastructure, energy retrofit. We think there's a very good case for a series of additional targeted measures to help strengthen the expansion, make sure it turns into more jobs more quickly. But the financial reform agenda is very, very important. I mean, you've seen a devastating crisis, just deeply unfair, brutally unfair, hurt, millions of American families, hundreds of thousands of small businesses. And we all feel a deep sense of responsibility and obligation to make sure we are fixing what was broken in this financial system and put in place a kind of, tough reforms to provide better protection for consumers and make sure we don't have a financial system that can take these kind of risks again.
I want to talk policy, but we also have to talk some politics in terms of what's possible for making new rules. And after health reform, a lot of Democrats in the Congress are looking forward to being able to run on Wall Street regulation, these new rules for Wall Street. And with Republicans essentially signaling that they're mostly going to oppose them, it gives Democrats an opportunity to say, we're running against Wall Street, which I think a lot of them are salivating at the chance to do that. Your political image does not help them do that because you are seen as a Wall Street guy. Do you think that that image is unfair?
First, I'm not a Wall. You know this.
I know you're not a Wall Street guy, but everybody thinks you are. People think you work for Goldman Sachs. They think you were a banker.
Never worked on Wall Street, just so your audience knows. I spent every job I've had in life since I came out of graduate school, in effect, has been working as a public servant in government. I've never worked for a bank, never run a bank, never worked for a hedge fund. But, I sat at the New York Fed, I sat at the Treasury, and I watched what financial crises do to the innocent victims across the country. And I feel a huge sense of personal responsibility and obligation to make sure we are putting in place the kind of reforms we need to create a more stable, safer, more fair system in the future. And I am working very hard to make sure we achieve that. And I think this is a just war. I think it's a necessary, important thing to do. I think we have a deep obligation together to do this. And the President has put out a sweeping package of reforms, strongest reforms we've contemplated as a country since the Great Depression, necessarily so, because this was so damaging. And, the House passed a bill very close to what the President proposed. Senator Dodd's put out a very good, strong bill. I do not think this is a Democratic or Republican thing. This is an American thing. And I think you're going to see, when this gets to the Senate floor, I think you're going to see a lot of support for this, because I think it's very hard for people in Washington to look their constituents in the eye and say, we just had the worst financial crisis in generations, but we couldn't find the will as a country to reform the rules of the game. I believe, I'm more confident in this country that we're going to see people in the end decide they want to be part of reform, not part of resisting reform.
I think that you are right on one condition, and that is that if people see these reforms and the actions of this administration, and your actions in particular, as being standing up for the American people against the predation of Wall Street and the banks.
Yeah, and the great thing about this country, they can look at what we proposed. They can look at what the President proposed. They can see those things, and they can judge for themselves whether they look tough enough, whether they look fair enough, whether they think they got the balance right. And this was we've got a very tough, strong package of reforms.
Why is the Consumer Financial Protection Agency inside the Fed? Why not as a standalone agency?
Our view is it should be a standalone agency. We think it should be an independent agency. And what we proposed met that basic test. The key thing is that it have the resources it needs to do its job, have the authority to write rules that apply to everybody, not just to banks, but to payday lenders, to mortgage brokers, everybody that's in the business of providing credit to a consumer, and we wanted to have the authority to enforce those rules across the system.
But
you know what happened? We've gotten into this mess because we allowed this country to get to the point where there were a set of rules. They weren't tough enough, but they existed, but they really only enforced on banks. And over time, what happened is a whole industry of other people could come in and provide credit to consumers with effectively no constraints, no protection. It's outrageous failure of government. And the centerpiece of our reforms is to make sure that that never happens again. There's a clean set of rules, tougher rules for consumers, and they're enforced fairly and evenly across the system.
What about this threshold, though, that institutions that are smaller than $10 billion are not going to be subject to the same kind of rules as these larger institutions? I mean, the more I look at payday lenders, the more disgusted I get. I mean, I don't think there's any reason to say they're like loan sharks. I think they are loan sharks.
Well, I'm inclined to think it's much worse than you think, to say it's much worse than you think in the sense that, again, across our economy, you had people that did just terrible predation, terribly abusive things, and they were left outside any effective set of constraints. So we have to change it. Again, the critical test is rules that apply to everybody enforced with people who know what they're doing.
But
that's the key test.
What's with the $10 billion threshold? That institutions smaller than that aren't going to be subject to the same rules that these larger institutions are.
Again, I can only tell you what the President proposed. What the President proposed is a very strong package of reforms and enforcement. As this bill has made its way through the Congress, in an effort to find the number of votes to make it pass, people have made some concessions. And again, the test we're going to use, the President's going to use, is does it have strong, independent authority to write rules and enforce them, not just on banks, not just on large banks, but on the non-banks, consumer finance companies, payday lenders, check cashers, mortgage services, mortgage brokers, that, we're the centerpiece, we're the center of all the terrible stuff that happened that caused so much damage. But again, our test should be, and this should be a test of the American people, is they should watch very carefully as these bills move through the Congress, because you're going to see a lot of efforts to weaken them further. You're going to see a lot of amendments to try to protect individual types of consumer finance industry, to protect the banks from supervision, from oversight, from enforcement. And we should all resist that. Because
that's it. And there's an important precedent here, which is what we're going through right now with health reform. I mean, we passed the Consumer Financial Protection Agency as a nation through the House with 0 Republican votes. It's in the Senate right now. Senator Dodd has introduced something that's a little different, but Republicans are not promising any votes. I know you say they might be there. But what's happened, like with health reform, is Democrats made concessions, traded away, made the rules a little softer than what you and the administration proposed. And in the health reform debate, the administration sort of went along with those concessions. We ended up with something that was a lot softer, probably a lot as effective as a policy than it would have been had we not been seeking those votes, and we didn't get those votes anyway. So do you make the same mistake again? Do you trade away this $10 billion threshold for regulation? You trade away the independence, the literal independence of the CFPA in order to chase these phantom Republican votes, or do you push further?
We're going to try to get a very strong bill. I'm very confident we'll get a strong bill. We're spending a lot of time making sure that we're listening to consumer agencies, advocates across the country, so that we have their input on what makes a credible test of a strong bill. The President's very committed to this. The American people are with us on this. I think we should have a strong hand. Senator Dodd's trying to balance, he's got a complicated job. He's trying to get a bill that's got enough votes to pass. And, of course, we want to give him as much support. You heard the President say yesterday that, we're going to fight against efforts to weaken this, and we're going to take every opportunity to strengthen it as it goes through the process.
There's more of my interview with Treasury Secretary Tim Geithner ahead. We will talk about the bailout of Wall Street, the loans that bankers still aren't making, and the bonuses that they are.
People are incredibly angry, and they should be angry still.
That is next. This is good stuff. Stay with us just ahead.